Hey, good morning, guys. Well, actually, good midday. We usually do these in the morning, but we decided to do it about midday today because it was kind of weird market action, right? We saw yesterday really ugly in the afternoon. That valuation trade is coming into play. We've been talking to you guys about it for the last couple weeks, few weeks actually. Um, that the money, institutional money, starts gravitating into your longer term, your old stalwarts, right? Like your AT&Ts, things like that, utilities, super strong dividends, super strong price action, even in adverse environments. You're seeing maybe that money that's made those big gains over that December run, the November, December, and January run are starting to unwind and take their profits and move that money into something more secure. There's looks like there's some headwinds we've been talking about for the economy, right? And you kind of see that trade. It materializes like that, that fear of the headwinds. Yesterday it was about third closings, right? France reclosed, Canada added some more restrictions, put back restrictions that they had previously taken off. A couple states are having a little bit of virus upticks. But so what I talk to you guys about at this point, guys, we need to open the economy. There's going to be some collateral damage. There's going to be little upticks in cases and things like that. But if we don't just start opening up, if we don't start getting people back to work, then we just end up in the same situation we've been over the last 6 months, right? When's my stimulus coming? And that's what happens. All right, everybody becomes reliant on those stimulant checks. And let's remember that the government stimulus is not a job. Although some people do make some good money for a long period of time on unemployment. And especially with that $300 extra now, right? It makes it nice and profitable. You can put that money into Bitcoin. Anyways, hey, let's go take a look at the market together, guys. Let's share screen here. All right. And you can see here in the markets, let's refresh this just to get a nice up-to-date quote. You can see we're about rolling right about mid-lunch in New York. The Dow's up about 300 points a percent. S&P's up about 25 points, almost 0.75%. But the NASDAQ, and that's the trade we've been talking to you about, right? And you see the VIX. VIX is not flashing any fear at all. Yet the NASDAQ's red, and Apple is not participating, right? Apple's having another little red day there. It's stuck between that 120, 123 range. It's probably a great buy here too. But you see that how that trade's working. If your leaders, your traditional leaders through the tech evolution, like your Apples, Microsofts, and stocks like that, start getting some footing here, that should be what takes this S&P up into those big projections, right? Remember back in December, some people were projecting 45 S&P, 4,500 S&P, things like that. If it's going to get there, it's going to have some leadership, and that leadership has to come from Apple. It's very simple right now. So you can see there's very little fear in the market right now. The NASDAQ is red. That's probably that trade that we've been talking about, rolling out of those high valuations into something more secure and more long-term. Oh, we'll see. Oil, right? We talked about Suncor yesterday, and Suncor's having a good morning this morning. If you guys did get into that, it's always a good time to buy a good stock, and we like that one if you guys are taking a look at it. Other than that, guys, it's just kind of a wait and see day. We talked about it, right? We're in a couple energy plays going forward. We bought those energy plays all the way out to the end of summer. That way we get that way we can absorb a little bit of this ebb and flow that comes with the reopening, right? And what I mean by that, guys, is you're going to have these moments like yesterday, right? Where maybe France or something happens and the market just kind of pulls back. It shifts on it, especially the energy sector. This bull rally, like I'm talking about with Apple, what this bull rally needs to get back going and take into other heights is the one sector that hasn't participated fully up until now, and that's the energy sector. You buy when they, buy into weakness and you sell into strength, and that's what we're trying to do. Uh, it's all about reopening, guys. I know I keep saying it, but that's what it's all about. Just open the damn economy. There's going to be cases, but we're, like I said yesterday, the Biden administration is saying that we're ahead of schedule on vaccinations and stuff like that. Let's get things really going. Other than that, it's just Wednesday. You guys take it easy today. This is going to be a short update. I just don't have a whole lot for today. Oil's up about 2-3%. It's getting a nice little bounce after that fiasco yesterday. So is the market, except for the NASDAQ. Not a whole lot going on in the news, guys. We still got the border issues going on, crisis, whatever. I don't know what word we're supposed to use. We've got potentially another big debt coming up, right? Instead of calling it stimulus, they're going to call it an infrastructure build, which should be trillions of dollars again. So I don't know. After this third stimulus round, I don't know if we can absorb another couple $1 trillion in that. And we'll see, right? For right now, like we said, we're bullish on energy. We like Apple, and we also own some Ollie options going forward right now. Ollie's getting a little beat up again today, but we'll be patient with that. I'm going to close with this, guys, and I've been talking about this almost daily. You're in a sideways market right now. You can see it in the charts. You can see it in everything. Let's go back to CNBC together, and I'll show you. You pull up that Dow chart. We'll just use CNBC for this. You get a nice 1-year chart. You see how much ado about nothing, right? We made that high recently in the beginning of March, and it's just been going sideways since then. But let me show you guys the S&P 500 chart. Okay. And you see it. It's almost a straight line. And that's all it is, and that's when you're in the day, like yesterday, guys, in the afternoon, it must have felt like the market was back in the COVID situation, right? Back in March, where it just sold down, down, down. But when you look at a chart, let's go look at a NASDAQ chart. Even with today's 50 points down, see, it's just sideways. We're just in this pocket here. So until the market decides to define itself, that definition is what you're looking for. Is it going to just go sideways? The way you trade a sideways market is you find your good stocks, you find your great positions, a little bit of thesis on why it should move up or down, and then you position. You give yourself plenty of time in your options, and you be patient with them. Don't be eager to tap out, stop out, or anything like that. Give them room to run. You see that NASDAQ chart says it all right there. It's just been from March. Really, we haven't done much, right? We pop up a little bit. This is what I'm talking about. You have days where you pop up and everybody, oh, it's a bull market. It's a bull market. Then the next day you're down, right? The same amount like today. And then all of a sudden it's a bear market, right? So yeah, you don't want to get caught in that wash, guys. Buy good stocks, great dividends, great balance sheets. Hold on to them for a while. Let those dividends compound for you. Very passive, very easy way to invest, right? And we give you a stock of the week every week that fits that criteria. And on your options, be very selective, but don't give yourself short leashes right now, because the market is so volatile that if you don't give your options enough time to play out, they'll just die in their boots. One market move the wrong way, and then you're at expiration with zero value, which nobody wants. Anyways, guys, look. It's Wednesday. You guys go enjoy your Wednesday. We'll be back tomorrow morning with any updates, with an update and stuff like that. Other than that, just kind of be patient with the market. Make sure you're building a good part of your portfolio in some solid stocks. That's what the institutions are doing right now, right? And you can see it in the charts. And when you play your options for a little bit of steroid growth in that portfolio, be very selective and be very patient. Give yourselves a little bit of a leash. All right, guys, let's call it a Wednesday. I'll see you guys tomorrow morning. Thank you for watching today. Don't forget, if you're on YouTube, go ahead and subscribe.